Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng is down 1.25%. Similar sort of losses being reflected on the Nikkei as well.
So Nifty found support once again at the 20-day moving average and moved higher. 24,840. So absolutely flat. Nifty Bank is up about 0.25%.
125cc plus segment has outperformed this 6% growth. It'll probably be between 8 to 12% growth.
We believe that yes, we are now in a position to continue to have this growth and then meet what are the stakeholders' expectations from the sector and from the Suzlon.
It's been a week that we've gone nowhere on the index, right? And even today, we are at the lowest point of the day.
The poll gave us a number of 6.85, but some of the respondent responses I got after the poll was done were closer to 7. So I would prepare for an upside surprise to that 6.85%.
That on account of the concerns being raised, now they are scrapping this entire tender altogether, and that the future course of action is to be decided now by the Maharashtra government.
Small gold loan borrowers should not be adversely impacted by any kind of guidelines that the RBI has in mind.
So we are starting off the June series on a slightly subdued note, especially as far as the Nifty is concerned. But remember, the May series, despite all of the news flow, managed to hold on with gains.
Okay, well, that is the day so far. Markets are down 60 points. I mean, so again, it's a neither here nor there kind of a day because it's not much. The Nifty Bank, by the way, I think is up about 1/3%. Mid and small caps are doing their own thing, so it is very much a stock-specific day. We're coming to you from the CNBC-TV18 Muthoot Finance studios. I'm Prashant, Rima, Surbhi, Nigel with me here in the studios and the newsroom. Guys, hi, good afternoon.
Hi, good afternoon. It's been a nothing kind of a week, actually, not just day or afternoon, right? Because for the index, at least in terms of direction for the market as a whole, the Nifty has not found its clear intent. But I think individual stocks, that's what the week has been all about. And I guess that's what the last hour may be all about as well.
Well, that's right, guys. And y'all are three of y'all in the studio. So why is today a good day? There are three big factors. Why? Rima?
It's a Friday.
Okay.
Salary.
Yes. And?
Okay. 1 hour
End
ago.
of earning season. End of earning season.
Bingo.
There, got it.
Lovely. After spending so many years in the newsroom together, I think you'll know the thought process. Three big reasons to celebrate today. Salary, it's a Friday, and obviously end of earnings as well. So good times. Let's see how
I think there is some cake there as well, Nigel, in the newsroom somewhere around, right? Pineapple cake.
Yeah, that's
advantages of being in the newsroom and not being in the studio.
Prashant, it's only cake right now, imagine. Let's get to the markets.
Absolutely. And, markets, of course. But actually, market breadth is slightly negative. It's not bad in any way. And for the week, let me just look at so about 1/3% lower. So Friday to Friday, we're down about 80 points. That's it. So this is a absolutely flat kind of week, which is actually not bad. It's been consolidating. Last week was also flat, by the way. The week before last was the big one, when mid and small cap indices went up 7% and 9% respectively. Last week was spent consolidating. Nifty Bank this week, Friday to Friday, is up 370 points, which is not even 1%. So 0.6, 0.7% on the Nifty Bank this week. And let's just look at the small and mid cap indices as well. Small cap index is up 1.5% for the week. And I think the mid cap index will come up on your screens. That is up about 1.5% as well. So once again, the outperformance as far as large caps go continues absolutely unabated. So that's essentially going to be the focus here as we go forward. But I think, we have the last hour coming up. So let's get Mitesh in with a quick check on what the closing strategies are and what he'd want you to do. Mitesh, good afternoon. What do you have?
On the index, nothing much. What is happening and what is interesting is the Bank Nifty or the Bank Index. I think that's where some kind of a breakout is taking place. The Bank Nifty, sustaining above 55, 560, 550 zone is a positive. So as long as we are above that, good chance that this time the bank Nifty could clear 56,000 and even head towards 56,500. So we're positive over there. In fact, on the stock side as well, I have two banking names as the buy calls. One of them is PNB. So buy here with the stop at about 104. Look for a target of around 110, 11 to begin with, and then eventually 115 is what I'm looking at. Similarly, SBI is on buy as well. Buy here with the stop at about 800 and a target of around 835 can be looked at.
Okay, all right. You know, Mitesh, stay with us. I'm going to come back to you for Muthoot Finance. A quick call because Muthoot is surging as we speak. We, of course, put that story out with Rima earlier this morning, with Sapna, beg your pardon, earlier this morning. And, you know, the conclusion was, and that time it was not up 7.5%. There was positive for gold finance companies. So what are the news? I mean, this is the Ministry of Finance, which seems to have examined the RBI draft directions on gold loans, and RBI is to ensure that requirements of small ticket borrowers are not adversely affected. So ticket sizes under 2 lakhs may be excluded from proposed directions. So this is a positive development, reduces the overhang on the space. Let's speak to the management of Muthoot Finance now, who is joining us. George Alexander Muthoot is Managing Director of the company to take some questions, to answer some questions. Mr. Muthoot, great to have you with us here, sir. Thank you very much. Good afternoon, Prashant here. So this is unambiguously positive in that sense. How do you read this?
I think, first of all, the fact that there is a consultative approach by the RBI and the Ministry of Finance is certainly good. And the views, the fact that Justice Muthoot, the government is also considering or keeping the consumer first attitude. So that is the attitude which is definitely required, the consumer first. The earlier directions were not that good for small borrowers, especially, and also for NBFCs. I think we had also given our suggestions almost on the same lines to RBI and the ministry, and I'm sure they would have both thought about it, and they are thinking of maybe revisiting the regulations, draft regulations once more. That's definitely positive, because we have always felt that this is an industry which is serving the public, serving the consumers.
Mr. Muthoot, these are at the end of the day suggestions, right? These are suggestions. At the end of the day, the regulator will have to decide.
Yes. So at least.
So that is one. These are I mean, they can only suggest, which is what this is. And second, which are the 1 or 2 top kind of things which, according to you, would have adversely impacted, as you said, the borrowers and of course then your business as well? Which the ministry is suggesting that gold borrowers who use gold as collateral be excluded from? Go on, sir.
Yeah, I think most of the suggestions earlier were based on the processes, controls, etc., which is fully welcome. But when the suggestions was about making it a little difficult for, or maybe a little more complicated for the borrowers, and especially the small borrowers, that is what actually really would have affected and finally would have led the customers to go back to the money lenders. I think that must be the biggest one. So I think now that people are thinking on that, as you said, the final decisions, final regulations have to come from RBI. But at least we have some, the ministry also supporting some of the views which we had given.
Mr. Muthoot, hi sir, good afternoon, Surabhi here. Just to dive a little deeper into exactly that point, the question that Prashant raised. Now, in that RBI consultation paper or the draft guidelines, some of the proposals that they were saying was to cap loan to value at 75%. In the earlier years, we've seen lenders go up to 80-90% as well. I think you've told us that you anyway try to keep it around that 75% mark in any case. Would you want to see some change around the LTV norm? Would it be something else? There was one more norm I remember, because this whole point of gold ownership, that the customer has to prove that the gold that they're coming to give as collateral, that they are legitimate owners of that gold. In many cases, it's, the family jewelry has been lying around for decades, and maybe it's tough to provide ownership. So was that another condition that perhaps the industry is also seeking could be diluted? What specifically would you want to see a little diluted in the draft guidelines?
No, I think you're not exactly correct when you say about LTV. The loan to value is already fixed at 75%, both for the NBFCs and the banks. It is only the question was some of the banks were maybe treating it as agricultural loans and giving more than 75. Otherwise, no NBFC can give more than 75%. Having said that, today the loan to value is only capped at 75% for NBFC. But having said that, at today's price, the average loan to value today in our books is only 58%. So people borrow only 58% because the price has gone so high. So
there's plenty of headroom.
Yeah, definitely. But 75% is good. We wouldn't want definitely the RBI to increase that from 75 to higher level. As an NBFC, as a largest gold loan industry, we would also not want RBI to increase the rate from 75 upwards. The second point is about the ownership of the gold. It is nobody carries a jeweler's bill with him when he comes to, or I don't know any one of us, neither you or me, has a bill for the gold which I'm wearing. So it is only probably getting an affidavit from the person that he has purchased it and it owns to him should be sufficient. That's what I think, a common sense approach.
And the purity, sir, I mean, there was also some, just tell us if there is anything in the suggested, the RBI draft on the purity of gold, on whether it's 22 carats, all gold needs to be treated as 22, etc. Customers might be bringing gold, which is 18 carat. So on that purity part, would you want anything to be be made less onerous from what the RBI is proposing?
Yeah, I think this is already there. This is something which is already there because we are supposed to take only 22 carat gold.
Yeah.
Just less than 22 carat, we have to actually convert it or maybe reduce the price to make it to
22 carat.
22 rate and then only give. That is already there. It's nothing new. It is already there. See, as I said, most of these regulations, process, etc., are already there. It is just once more reiterated and made into one single composite direction. That's all.
Okay. Sir, the Finance Ministry has also proposed exempting loans below 2 lakh for the small borrowers from this 75% LTV cap, right?
I don't think that is there. I didn't read it that well. But anyway, even if they propose to exempt it, I think as a prudent NBFC, we wouldn't like to give more than 75%.
What percentage of your loans are given to sub 2 lakh crore, 2 lakh rupees in terms of borrowing?
But I think more than 60% of our customers are below 2 lakhs. More than 70% of them are below 2 lakhs.
Okay, and the LTV for them is also below 75%.
I didn't hear you, please.
The LTV that you give out, the LTV for the small borrowers below the 2 lakh mark, for them also it's below 75% for you.
Yes, we have actually not distinguished anything below 2 lakhs or above 2 lakhs, etc. As of date, the regulation says we have to go only 75% maximum, and that is what we would like to continue.
So, sir, incrementally, I mean, from everything that you describe, in its present form, the RBI draft guidelines, which you're saying many of them have been in place already, in its present form also, you do not see it impacting business in any way, right? That would be a fair assessment?
No, I think the draft regulations had one or two issues about the LTV because the 75% there was some deductions, etc., to be made from 75%, which required some clarifications. That's which you are asked. I think now that we will have to do that clarification. So they were saying that not every loan can be given at 75%. Some loans have to be reduced from 75 to something lesser, etc.
Right, Mr. Muthoot, let me ask you the standard question in terms of guidance, since we have you on anything. Always say minimum 15%. Is that still 15%? Or
I'm sure it will be better than that, but I don't want to commit on record about that. But please wait for our quarter results. We will do that. Anyway, the business is quite good. Business is growing. A lot of people are borrowing, even at whatever. I said our average is only 58%. Still, people are borrowing because they need the money.
Yeah, no, absolutely. So, I mean, it's turning out to be a good month so far. I mean, this month, right? It's turning out to be a good quarter.
Yes, I agree.
And so just rechecking the average LTV across your portfolio that you are maintaining as of now, and this varies with gold prices, but as of date, it would be around, you said, around 54%, is it?
58%. 50, if you, right,
58%. Today's gold price, 58% is the average LTV.
Yeah. If you take the weight of the gold and our total AUM, it is only 58%. Because everybody has not borrowed all the 75%.
As gold prices, if they keep going higher, that number will
going up so high.
It'll keep coming. I mean, the LTV will keep coming down. Thank you very much. Good speaking with you, sir, and appreciate. Sorry, you wanted to say something?
I think this is actually a very useful loan model, and people shouldn't make it very complicated. That's all. That's what we want to say. Don't make it very complicated. It's just somebody pledging his ornaments. If he wants to sell it, he would have got all the 100%. But he wants to take it back. That is why he's pledging and paying interest. So these people take it back, which is something which you should help them not to sell the gold, but to take a loan of it and to save the gold. That's what is happening today. So don't make it very complicated, and there is actually no risk also in this. It's something which we always like to shout from the top of the...
it's a business you've done for, I think, one of the oldest players and done it successfully. And I think the ministry, of course, the government seems to agree with you. And that is the reason why they come out with these suggestions. Mr. Muthoot, thank you very much for your time, sir. Good speaking with you. It's always a pleasure here on CNBC-TV18. So that is the conversation with Muthoot, which, by the way, is one of the big gainers with tremendous amount of volumes, great gains. What a move, 7%, 8%. That's a 160 rupee move coming through. And, just look at what the open was. Open was 2,073. So, and for the first couple of minutes didn't do anything and then started moving higher. So it's been, it's come up gradually through the course of the day. Okay, what we'll do is we'll play out an interesting conversation. This is the conversation I had with Mark Mobius. He's, of course, someone who needs little by way of introduction, chairman of Mobius Emerging Opportunities Fund. And I spoke to him on our new program, The Global Reset, on CNBC-TV18 Prime. We spoke uncertainties around tariffs and, of course, what this means for markets. Mark has a clear non-consensus view. His view, what is the consensus? The consensus is that US deficits will rise, dollar will be under pressure. That's the view. That's the consensus view. He thinks the opposite will happen. Deficits will not rise, and the dollar actually, beyond the near term, will actually strengthen substantially. Listen in.
I think the words that you use, things have been turned on its head, because Trump has done that actually for the global economy. He's basically said, look, folks, we're starting a new game. I'm throwing out all the old ideas, and now we're going to start over again so that the U.S. can get the fair treatment. And by the way, this kind of fair treatment idea is being extended to all around the world. Other countries in the world are beginning to ask the same questions that Trump is asking. But you must remember, Trump is a negotiator. He loves to negotiate. And the way he negotiates, of course, is start out with the worst possible scenario. So that's the reason why he said, I'm going to give you a high tariff. I'm going to kill all of you, and you're going to be all in trouble. And then he starts to negotiate down to a reasonable level. So now we're really in the middle of this. We're not finished with this negotiation, but we're beginning to see some light at the end of the tunnel. And I think people around the world, investors around the world, realize that at the end of the day, it's not going to be as bad as it seems. And probably we'll end up with a actually fairer trading system, which will be good for everybody. So it's interesting to see how this is going to develop. But at the end of the day, I think it's going to be much better than many people imagine.
The big, beautiful bill, as Trump has called it, should that put to rest any doubts of where U.S. deficits are headed? They're headed higher, much higher. Some estimates suggest additional 2.5 to 3 trillion in deficits by 2034. Some have pointed out that the bill which is now being pushed through is more of the same. I mean, tax cuts now, spending cuts later. What is your sense, Mark?
Well, it's interesting. You can see what the U.S. dollar has done. The U.S. dollar has weakened against many currencies. So observers and investors around the world are beginning to think, yes, the U.S. is going to be spending like crazy and the deficit will increase, which in turn will reduce confidence in the U.S. dollar. But I believe that this is not going to take place. What will take place is, oddly enough, a reduction in the income tax rate will result in increased income from taxes. We've seen that before. When you reduce the rate of income tax, the actual returns from taxes paid increases. That's number one. Number two, with the revitalization of industry in America, of course, it will take time. It won't happen overnight. But over the next few years, you'll see a much higher tax income from industry in America. Then finally, don't forget the tariffs. Generally speaking, the tariffs will be higher. The income from tariffs, particularly from China. Must remember, China is the biggest exporter, or Chinese imports are the biggest for the U.S. than any other country. Now, with the tariff on Chinese goods, that income, of course, will go into the budget of the U.S. So all of these factors are going to play, I believe, to a situation where the deficit will be reduced, not increased.
So you're saying lower income taxes, leading to sort of, more propensity to spend on taxes that way, higher collection from industries as industry in the US does better, and a lot of the tariffs which the US will take in. So you're not of the opinion that deficits will be out of control in that sense, Mark, right? That's what you're saying.
That's right. I believe the deficits will not be out of control and will probably be reduced as a result of the resurgence of the US economy.
Okay, and as a consequence of what Mark said, I mean, he goes on to add that the dollar, because deficits are not going out of whack, deficits will reduce, which, I mean, actually I have not heard from anyone else, and this was an interesting point. The dollar will strengthen. Near term, maybe it weakens a little bit, but longer term, it will strengthen substantially. That's Mark's view. We're excited to unveil our brand new global business news channel, the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders, and economists, shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into the channel, CNBC-TV18 Prime, at 12 noon for the global reset. You'll find Mark Mobius on the global reset. The episode played out today. You can catch it on YouTube. And of course, later at 8:30 p.m., my colleague Parikshit hosts the Global Lens. Okay, welcome back. We got the market, which I think is absolutely, flattish, sideways is going to put it. But there are lots of individual movers. Kiri, for example, came up at the bottom of the screen, and Sudarshan will explain what's happening there, along with a bunch of other stocks in just a bit from now. We have Varun Goyal, who's now with us. He's Senior Fund Manager, Equity at Mirai Asset Investment Managers. Varun, good afternoon. Great to have you with us here. Thank you for your time. I don't know if you got the chance to listen to the Muthoot management earlier. Stock's up 8%. I don't know if you own this name. You have a view. Go on.
I think gold finance overall continues to be an attractive opportunity. And I think whenever we see sharp spikes in gold prices, typically the companies or the various institutions which are engaged in this business, their ability to lend more for the same amount increases. So I think typically we have seen growth coming back to gold finance companies in times of big gold price movements, and this year looks like one of those years. So I expect gold finance companies should do well.
Hi Varun, good afternoon, good to see you in. So from the banks and financial pack, since we touched upon that first, what would you be most optimistic on? The couple of conferences that have been held this week, the feedback that I've got is there's plenty of interest now in the PSU banks. They haven't done much, I think, for the last 12 months or so, but suddenly that interest level is back out there. Your take?
Yeah, good afternoon, Nigel. So I think broadly we expect BFSI companies to continue to do well. We have already seen 50 basis points of rate cut this year. I think this is at least 50 and maybe even 75 coming pretty soon. And looking at the inflation scenario, and I think an important thing is that looking at the weakness in the US dollar, I think RBI will carry out significant monetary easing because they don't have to worry too much about rupee now. And therefore, we believe RBI rate cuts could be front-loaded from this point onwards, and that should be good news. I think loan growth should stay resilient for system at a whole at 12-13%, and some of the larger public and private banks should be able to deliver high double-digit lending growth. And I think post the first 2 quarters, we should see stabilization of NIMs. And that should lead to good earnings growth from the second half of the year for most large banks and financial institutions. So broadly, we are pretty optimistic on this space. I think valuations are pretty attractive, both for public and private sector banks, and we continue to be invested in the same.
Okay, all right, got that point. Varun, hi, good to have you on. I remember you saying that the market and overall the economy should see strong cyclical recovery over the next 1-2 years. The question is how to play that. I mean, whether you're better off playing that. I think real estate is a sector that you singled out even last time, that maybe that could be a way of playing it. Beyond real estate, if the market is poised for good earnings growth, then which sectors, where will it show up first?
Yeah, good afternoon, Subhi. So our sense is, yes, post economic slowdown and earnings, kind of a holiday in FY25, I think FY26 should see a lot better economic growth. So we expect Nifty earnings growth to move from low single digit in FY25 to, let's say, 12-13% in financial year 26. And we believe banks, telecom, IT, pharma will continue to be the drivers of that story. Also, please keep in mind that in FY25, there is a big decline in earnings of metals and oil and gas, because the refining margins were poor and the commodity prices came off. And that has impacted the earnings growth in FY25. And I think some of that will see good earnings growth on that low base. And therefore, we believe that journey to 10, 12, 13% kind of earnings growth is not that difficult. And our sense is, with the benefit of these tax cuts and rate cuts, we should see economic growth coming back very strongly in the second half of this financial year. I think already the results that came in, I think they're either in line or slightly better than what we were expecting. And our sense is cyclical, domestic-oriented sectors, be it real estate, capital goods, banking and financial services, auto, generally should see a good year going ahead.
Varun, the broad view, say a couple of months back, was this is the time to bet on large caps. And small caps went through a period of correction. From here on, would the buy still be with the large caps? Or do you think that as the earnings recovery plays out, then maybe in one's mutual fund, you should be biased more towards, lean in more towards small and mid-cap funds to make that extra money?
So good afternoon, Rima. So, of course, if you look at the valuations based on FY27, Nifty 50, I think, trades closer to 17 times. The small cap index trades closer to 19 times. But I think the important differential is that Nifty 50 will have earnings growth of 12-13% on a CAGR basis, whereas we expect small cap index as such to have a 20% kind of earnings CAGR between now and 27, and especially the base is very low. So our sense is, both the asset classes should do well. Of course, every investor needs to do his asset allocation in terms of large, mid, and small. In fact, we launched a small cap fund in January, and while the start was very volatile, I think things are beginning to look up, and our sense is for investors who have a 5-year plus investment horizon, small cap also continues to be a very attractive asset class.
Varun, how much of cash are you sitting on as a percentage of what you manage?
So Nigel, as a house, we don't take very aggressive cash calls. I think a couple of percentage points, but nothing beyond that.
Nothing beyond. All right, all right. The other sectors that were in focus, they ran up too much, and then they cooled off for the likes of defense as well as railways. I'm not sure what kind of exposure you have out there. Defense clearly has come back into play post the skirmish that we had with Pakistan on the border. But what's your view on both these two sectors? Because both of them have a long runway. Some of them have got very, very expensive on valuations, but there are very high interest levels. Your take?
Well, I also will be a believer in the defense story. I think it's a 5-year, 10-year kind of a story. And looking at the geopolitical situation that we have, I think defense is kind of a core requirement from a country perspective. So I think incrementally we would see more participation from the private sector. Of course, there are several defense PSUs which are doing quite well, and our sense is a lot more startups and private sector companies will also begin to participate. Valuations, though, of course, remain a challenge, and one really has to pick and choose companies which have visibility of growth at the right valuation. So we do have some exposure to defense space, and we would wait for some price correction before further increasing our exposure on the defense side.
Okay. All right, Varun, we'll leave it at on that note for this afternoon. Thank you very much for joining in. You have a good weekend, and we look forward to connecting again soon. Thanks for joining. Okay, let's just get back to the market and see what's going on. Not too much, 70 points down. It's still pretty much the same picture. Eternal is the big winner this afternoon, 4% higher, continues to charge ahead. I think we'll take a quick break on that note. Come back on the other side. We'll have our special segment, as always, D-Street Chatter. Nimesh joins in with everything that's buzzing in dealing rooms today. And then some final trading calls coming up as well. Back in just a bit.
Welcome back. Well, the Nifty, has seen some kind of recovery. We're down only around 50 points. The bigger story, though, is in the broader markets. The mid-cap index in the green and the Nifty Bank on its way towards that 56,000 odd mark, which has been a resistance for close to around 4 times in the last 45 days. That said, it's time for our favorite segment, D-Street Chatter. Nimesh joins us to help us out with what he's picking up. Nimesh, what are the flows looking like? I think there's that MSCI rebalance.
Yeah, it's a quiet start to the new series, and the flow seems to be only regards to MSCI. So XF MSCI, even the flow seems to be quite muted as well. That's overall feedback. So while the number may look big because of the MSCI rebalancing, but X of that, there's not much to talk about. I've been saying consistently for the last many days that the traction seems to be clearly in the PSUs, and that continues to outperform. Whether it's good numbers or bad numbers, the stocks reacts positively. And today is a day for big breakout in the PSU Bank index. And the banking stocks, PSU bank stocks are buzzing in trade, big volumes as well. I understand some bit of buying flows are also there in the PSU bank stock. Yeah. So that's one sector which really stands out for me. And again, the trend of the block deals and fundraising, that's likely to continue. So that trend continues, but largely it's a quiet day even from a flow perspective, ex of MSCI.
All right, and Nimesh, I think the conference season is back, right? This week we had plenty of conferences. It gets busy post-work as well, and next week we have a couple of more conferences as well. But what do you pick up in terms of chatter?
Okay, in terms of individual names, the first couple of stocks there is massive delivery-based buying. Samudra Motherson as well as Interglobe Aviation. Despite a large block in Interglobe Aviation, a lot of funds bought, there is still buying from the open market in that stock as well as in Samudra Motherson. So expect high delivery volumes on both those names today. The second stock is Wokhard, up 10% and large volumes as well. I understand there are some strong flows at HNI desk, and also the street is anticipating some corporate development with regards to one of the molecules very soon. So that's a trigger for Wokhard. The third stock is Borosil Renewables. Post earnings has been in a very narrow range of late, but now I understand the company is likely to raise funds via QIP very soon. So that's a fundraising trigger in Borosil. And the last stock is PB Fintech. Again, post earnings, the stock has been a bit of under pressure of late. But again, in PB Fintech, the indication is there could be a large block in PB Fintech very soon.
Thank you very much for that. The Nifty is still below the 24,750 mark. Bajaj Auto, top loser, 3% down. IT is on the back foot. HCLTech, Tech Mahindra, Infosys, all staring at cuts between 1.5% to 2%. And you also have about a 2.5% knock coming in on Hindalco and Shriram Finance. On the way up, Eternal is the big mover. And then you've got banks like State Bank of India and HDFC Bank, which are helping the Nifty Bank outperform. That up move in the banking stocks in the last 2 hours came in courtesy SBI and HDFC Bank. Mitesh is now back with us for a few BTST calls for the weekend. Mitesh?
Yeah. I think, it's the banking pack, which I said earlier, is doing well. The rest of the pack, I think, is still dicey and tricky. So we had some long calls out there. So, we'll try and look at other opportunities where some shorting can, some negative positions can be taken, because the Nifty isn't, showing any clear strength to break on the upside. So I'll take a SCBT on Tata Power. He was talking about 395 half. Look for a target of around...
Pretty vibrant screen out there. Mitesh, I don't know if you have any thoughts on IIFL. It's been slowly creeping higher. A lot of damage on the stock price. But a week after it's building a decent base, 2% today as well.
Prashant, IIFL has been in an uptrend for the last 4 weeks, and I think the strength is still there. I think it's the first target I have on the upside is around 450, 455. And in a good case scenario, even 470. So still positive over here. I think any decline should be used to buy into this one.
Okay, all right. We'll leave it there, Mitesh. Thank you for your calls and appreciate it as always. Now, the Ministry of Statistics will announce the GDP numbers for the fourth quarter, India GDP that is, of last year and for the full year FY25. CNBC-TV18 poll sees the fourth quarter GDP at 6.85%, the full year number at 6.3%. Let's get a quick preview going. Lata is here with exactly that. Lata, over to you.
The poll gave us a number of 6.85, but some of the responses I got after the poll was done were closer to 7. So I would prepare for an upside surprise to that 6.85% that we got for the fourth quarter. The GVA is 6.5 for all respondents, and that's a more important number. Just for reference, the previous numbers are coming up for you in a table. Last quarter was 6.2. Second quarter was 5.6 and Q1 was 6.5. I'm giving you these numbers for a reason. I'll come to it in a minute. What is expected to fire well in the fourth quarter are agriculture, services like construction, finance, and public administration. That's the government services. What will not do well or is expected to lag would be manufacturing. Investment and consumption are both expected to do well, but investment will do a little better than consumption. Growth, that's the expectation. There is a large gap expected between GDP and GVA because of the lower subsidies, and that's important to note. So GVA, everyone expects at 6.5. The important part is the previous quarter's numbers may be recast. You remember that 5.6 in the second quarter? If that is recast, then the numbers can look very different. Then all bets are off. Then don't go by our poll at all. For the full year, the expectation again is 6.3. Again, if previous numbers are recast, then this can well be 6.4 also. Many people told us about that number. Upside surprise is what people are expecting.
Okay, all right, got that point. Lata, thank you very much. So we'll watch out, of course, for the GDP print. For now, let's look at a lot of the earnings reaction. We've had some outsized reactions over the course of this week and some even today as well. Stocks like Gujarat Pipavav, Sobha, Landmark Cars, Amara Raja, all of them reacting to Q4 numbers. Sudarshan is here with a quick roundup. So
we'll start with companies which are reacting positively after their Q4 FY25 earnings. And first on the list is Gujarat Pipavav, which has reported a steady set of earnings in this challenging environment. Revenue was flat at rupees 250 crore. Even EBITDA was flat at rupees 157 crore. And company has managed to hold on to margin above 62%. Next in the list is Sobha. It has reported a healthy Q4. Revenue was up 63%. Even EBITDA has increased by 52%. And collections were up 21%. And sales value have risen 32% on a sequential basis. Now coming to the companies which are reacting negatively to their earnings, and first one is Mazagon Dock. It was a weak Q4, but for FY25, company's performance remains healthy. Q4 margin was down 1400 basis points YOY and 2300 basis points on a sequential basis, but FY25 revenue and margin was above its guidance. Next is Landmark Cars. Revenue growth was healthy. It was up 26%, but margin has seen a contraction. It was down 120 basis points YOY. Amara Raja, it was operationally weak quarter. Profit was down 30%. Revenue has increased 5%, but margin has contracted by more than 300 basis points YOY. Next is Westmont Living. Growth for this company remains soft. Revenue was up 3%. Margin also remains under pressure. It was down 200 basis points, and company has reported FY25 revenue growth of 9% against its guidance of 10 to 12%, and also company has refrained from giving the guidance for FY26. Last in the list is Kire Industry. It was a muted set for Q1. Company has reported a loss of 85 crore versus loss of 10 crore in the same quarter last year, but EBITDA loss has narrowed. For Q4 FY25, EBITDA loss is rupees 5 crore versus loss of rupees 10 crore. But stock is seeing sharp downtick because in last 1 year, stock has moved higher by more than 120%. Okay, all right. Thanks a lot for that, Sudarshan. Well, let's focus on a couple of these pharma names, though. They as well are reacting to their numbers. Ekta joins us to run us through a few of those companies from the pharma pack. Ekta?
I'll start with Orchid Pharma. It has been down and out for the past couple of trading sessions, down 20% this week itself at current reckoning. Nuvama wrote a note post the numbers. They said that the base business pressure led to muted FY26 guidance, and they've cut their target price to 990 rupees. Alkem, the street seemed to be a little disappointed with the guidance. So the company is guided for high single-digit overall revenue growth in FY26. EBITDA margin guidance for FY26 is flat on a year-on-year basis, but for FY27, they're guiding for double-digit revenue growth. Wockhardt, there seems to be a turnaround on a year-on-year basis with a 6% growth in terms of revenue as well as lower losses. So revenue up 6% to 743 crores, margins 9% versus an EBITDA loss, and a profit, or rather a net loss of 25 crores versus a larger net loss of over 160 crores on a year-on-year basis. Concord Biotech, revenue up 35%, margins have expanded 200 basis points to 44% versus 42%, and Shalby, that one disappointed the street in terms of its operational performance. Margins came in at around 8% versus 16% year-on-year, and a net loss of around 11.8 crores.
Thank you, Ekta. But before we let you go, tell us about Apollo Hospitals. Numbers expected today. What is the street anticipating?
Apollo Hospitals this quarter, we are expecting a revenue growth of around 13% margins coming in at around 13.7 versus 13% this quarter. And the profit should come in at around 360 crores plus. Now, in terms of key expectations, the street is anticipating around a 10% growth in terms of the hospital business, which will be led by a 5 to 6% increase in the average revenue per occupied bed, as well as steady occupancies. So the occupancy in Q3 was at around 68%. The overall growth is expected to be led by complex procedures as well as the international patient growth. That was steady in the previous quarter. International patient growth, it was up 19% ex of Bangladesh. Now watch out for Apollo 24/7 because the GMV was up around 11% in Q3 with around 2 million users. So one will want to see what that trajectory is this quarter. Overall, margins should also improve and be higher on a year-on-year basis.
Okay, all right, got that. Thanks very much, Ekta, for the details over there. Let's continue to focus on some stocks that have been in the thick of the action today, and Suzlon is definitely one of them. What a superb move coming through, 10 to 11% higher through the course of the day after the company came out with Q4 numbers. We spoke with the management as well, sounding very optimistic on the current year, talking about 60% growth across financial parameters. We've got Vivek joining in with more details on what's powering the move. Vivek.
Well, Surbhi, looking at a 9% move on what is a very high market cap company with a very high equity base, 9% is a very sharp move and a significant market cap addition as far as Suzlon is concerned. But the main reason, like you highlighted, is the fact that the company has managed to have a very strong FY25 and especially Q4, they managed to end the year with a very strong quarter. Now, in terms of top line is up 73.2%, mainly on the back of the fact that deliveries for the S144 wind turbine has been very strong at 573 megawatt. On the back of that, revenues higher by over 73%. EBITDA, very strong operational performance as well, up 94% on a year-on-year basis. Margins expanding 200 basis points, coming in at 18.4%. And profitability, even if you take out the one-time deferred tax gain of close to 600 crore, even after that, it's a very significant up move, especially when you're looking at the profitability on a year-on-year basis. Now, at the end of FY25, order book quite steady. Company says it gives them visibility for the next 12 to 18 months, is at 5.6 gigawatt. And more importantly, the S144 wind turbine constitutes 91% of the total order book, implying that Suzlon now can look at a structurally higher EBITDA margin basis. As far as FY26 guidance is concerned, remember the company for the first time has actually given a guidance 1 year forward. WTG volume growth, revenue growth, EBITDA growth, as well as PAT growth, all are expected in the range of 60% on what is essentially a high base of FY25. So that is something the street clearly likes. And the WTG segment contribution margin is guided at 23%. Remember, the guidance for last year was in the range of 19 to 21%. So that too has gone up significantly. And the O&M business too quite steady, where the margins are structurally higher. So overall, a strong set of numbers from Suzlon, strong management commentary and guidance, aiding the stock up move today.
Thank you. Good time then to listen into what the management had to say.
Obviously, for the first time in our history that we gave a guidance saying that in FY26, we will grow by 60% minimum across the board. So that is not just giving a guidance of a number, and we are able to give a guidance for the first time, shows that we are now well prepared as an organization to see the future.
Okay, one more stock which has been under pressure all through the day has been Birlasoft. This is reacting to the sharp Macquarie downgrade, where they've double downgraded the stock from an outperform to an underperform, and the target price has been lowered by 45%. The new target price is at 350, which means more than a 10% downside from the current level of 400 rupees. The company, Macquarie, was bullish on Birlasoft. In August of last year, they had upgraded the stock to an outperform, and they were anticipating accelerated revenue growth and improvement in margins. But that didn't play out. If you remember the Q4 numbers, revenues were down more than 5% quarter on quarter. Year on year, revenues were down close to about 7-8%. Now, Macquarie is saying that for Birlasoft, revenue growth and margins will be subpar in FY26 and things will recover only in FY27. But, given the growth and the margin profile, the fair value that Macquarie is now attributing to Birlasoft is just a 15x multiple versus the 27 multiple that they had earlier ascribed. So that's the reason the sharp downgrade by Macquarie, the slash in target price to 350 versus 640 has put pressure on the stock today. Sudeep is now joining in. Sudeep, we spoke about so many companies. There was Birlasoft. Sudarshan was telling us about a whole host of stocks reacting to numbers like Mazgaon, Shobha, then there was Suzlon. Anything that you'd like to talk to us and highlight?
Well, absolutely. I think Suzlon, the numbers were really impressive. And more than the numbers, I think the management commentary and management confidence was very apparent in the call. So I think this company is in for a good time. And the way they are progressing, I think, I won't be surprised if there is a significant upside from current levels as well as the time goes by. The other company I did look at and was disappointed was Mazgaon Dock. I think the valuation at such a level, the company's valuation is that there is very little margin of error, and at that kind of valuation, if the performance is not as per the expectation, you will definitely be pessimistic, and that's pretty much what is getting reflected in the market today. The margin, sharp drop in margin was disappointing. I think all these defense companies at the kind of valuation at which they are, the execution is the key, and that is where we have to focus on going forward. The other company where I think I did like the results and the commentary was Bajaj Auto. They are trying to do all the right things and ticking all the boxes. The margin is what they have focused on, and I think it's a very good thing. Export, they're getting a lot of support from the export market, and that's very, very good for a company like Bajaj. The only challenge is domestic market share and domestic sales of motorcycles, and that's where there is a bit of a challenge. They're trying to scale up stuff, but overall domestic market has seen pick up in volume in scooters and not motorcycles. So that's probably the reason why Bajaj domestic numbers were not impressive. But I think they're trying to do all the right things. Let's hope, let's keep watching the space as far as this is concerned. I think that's pretty much what did attract my attention.
In the defense, since you spoke about Mazgaon and how there is no room for error, and Q4 numbers were no doubt disappointing. But even for a BDL, for instance, that's the one which came out with numbers earlier this week. I remember the stock was under pressure post the numbers. HAL, Hindustan Aeronautics, the numbers were fine, but the street was spooked by the guidance for FY26. Perhaps conservative, but just an 8 to 10% kind of a top-line growth. Now in the defense pack, given where we stand on the projections, the Q4 earnings, and the valuations, is there any defense stock which one can buy at this juncture?
Well, the only stock which I've been liking for last 1 year has been Bharat Electronics, and I continue to like that. The valuation has moved up quite a bit. And of course, post Operation Sindoor, there has been excitement in buying BEL, rightly so. And I do believe at some stage there may be a re-rating of this stock, because I think the potential here is immense. The company has been conservative and doing the right things. The order inflow last fiscal was nothing great. It was below expectations and below the management expectation as well. We probably will see a change in scenario during the current fiscal. Also, they have got into adjacencies like providing network support services for metro rail, which should help them. But defense itself is a large space, and they cater to all the three arms of the armed forces, which is Air Force, Army, and Navy. So export opportunities are opening up as well. So BEL, a re-rating at some stage is possible. And from a long-term investor point of view, I think that's a very good buy, considering their operational performance as well.
Okay, all right, got that point. Sudeep, we do have to take a quick break. Stay on, we'll have more questions for you in just a bit. But as we take this break, here's the good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app from the Apple Store or from Google Play. You just need to scan the code as well. You can straight away get to it from our screen. Welcome back. Okay, so it's going to end down. It's going to end probably 80 to 90 points lower. That's what the Nifty is poised for at this point in time. Quite end to the week and slightly negative on the bias because the index has lost about 0.5% now, all things put together. So Deep, let's talk about the winner of the day and the loser of the day. The winner of the day is Eternal. The loser of the day is Bajaj Auto. And it's very clear. We, in fact, quiz the management on this as well. I mean, when will they start regaining their lost market share in 125cc plus, where the margins can sustain at 20% or not? Margins are fine. The problem is volume growth. What's your sense on the stock?
Absolutely right. I just was mentioning, Surabhi, that I think a couple of things have worked very well for them. One, they have remained focused on margins, and that's absolutely great. Exports have worked very well for them for a change. I mean, there were a couple of years back, you remember that they were struggling with the exports with challenges in Nigeria. Now I think that has been resolved and exports is doing fine. Now the whole issue has come to the domestic market, and that's where they are suffering. But look, I think the overall motorcycles were suffering and the scooters were picked up in numbers, and Bajaj doesn't have too much of strength in scooters as of now. So I think that's probably the reason why they suffered in the domestic market. But they are trying to do a lot of right things, and they're focusing on the core strength into motorcycles in domestic market as well. So that's a strategy. They're trying to gain market share, of course. But that's a bit disturbing. The market share loss in India is a bit disturbing thing, and I'm sure they will work on it. And market naturally is punishing them for that.
So buy or avoid right now?
Well, I think Bajaj Auto is a buy for me. I do keep the results.
All right. So it's a buy. You're keeping the faith on them getting back their mojo. Yes. Very quickly, Eternal. I mean, the winner of the day, what a move, 4.5%. Some of it is all strategic and tactical because of the index adjustments. But otherwise, what's your take? There's a big debate going on whether these, the expansion in the dark stores, quick commerce, whether that will keep eating into profitability and whether that will be a bit, long drawn. Your sense again?
So I think I've been mentioning this very clearly that if I have to buy one company in this particular space, I will buy Eternal. Yes, there are challenges in the short term, and that the management has come out very clearly and mentioned that margin may not be the focus right now. Expansion is the focus, and market share is the focus as far as the quick commerce business is concerned. And probably that's the right thing to do in this space, and that's what they're continuing. So if you are a patient investor, you want to be in this space, I think the opportunity for expansion for these companies is significant, and as Eternal is rightly positioned to capture that. They are the market leaders, and in these kind of businesses, it is winner takes all. So it's better to be with the winner. So I still have faith in Eternal. Also, remember this entire correction was kind of driven by the fact that this weightage change, and because they restricted the foreign shareholding to 49% to take benefit of some benefits in the business, which is allowed for domestic companies only. So they consciously chose that, and that's why all this rebalancing happened, which led to some selling. So I don't think I'll be too perturbed with this particular phase of selling or buying. I think we have to retain faith and remain invested if we want good results in this counter.
Got that. Ola Electric. The issue price was 76. Today, the stock is at 50 rupees. Very ballooning losses, 870 crore in Q4. The question is that if someone doesn't want to stay invested, Kotak has put a target price of 30 rupees. Can they sell at this level, or this is not the price to sell or buy?
Well, I think it is better to exit, and I've been telling this for a very long time that there are fundamentally a lot of things not going right for Ola Electric. Look at the number of customer complaints and the challenges which they are facing in the marketplace. The volumes are coming down. Of course, they would have lost market share, and they are losing market share. I don't think that's the point. The point is even the volume they're doing is having enough and more challenges. Also, the battery plant which they are putting up was a good thing at one point of time, but now considering everything, one is not sure, and that is definitely a drag on the overall performance. So at this stage, I don't think it makes sense to remain invested or buy into Ola Electric. It's better to book loss if you are sitting at a loss and exit the counter.
Yeah, no, absolutely. I mean, 4.5% lower, seen a lot of price damage really coming through this week. Just a quick word, Sudeep, good afternoon. on a couple of specific names here. So a Welspun Corp, after a long time, moved almost 24% actually, Friday to Friday. Any thoughts on this one if you track it? A pipe maker.
I think it's a good space to be in, and overall we have seen some excitement in the entire pipe space. And Welspun Corp is also a part of that trend. We fundamentally believe that these companies will do very well in the near future with the kind of focus on construction, infrastructure, and overall capital expenditure, which the government has outlined and which private sector is also doing. So pipe companies will do well, and Welspun Corp is in a unique position to benefit out of that. And I think fundamentally it's a good script to buy from a long-term perspective anyway.
Okay, all right. Sudeep, we'll leave it there. Thank you very much for joining us. Have a good weekend, and we'll see you back next week. Appreciate it, as always, you joining in. Just to wrap out things, the Nifty is ending 0.4 lower. Nifty Bank is actually higher by about 0.6.